Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Thursday, the 6th of June. Starting off with the FTSE 100, which is managing to maintain its trajectory within that rising trend channel from the end of February. The floor of the channel there around 82.30. Above that, we are looking for at least a retest of Monday's shooting star peak, 83.71, and then obviously looking at the best levels of the year to date, or the best levels ever actually, 84.74. Top of the channel there at 8,700 now, so that would be the best case scenario for the end of next month. On the downside, below 82.30, we would be testing the 50-day line currently just below 81.50. RSI on the right side of neutral 50, only just under 52, so that does suggest there's a little bit of momentum there for this market. Next up is the DAX, which has bounced quite nicely off the floor of that rising trend channel from the autumn, and bounced above actually the 50-day moving average, which is a bullish signal in its own right, as is the way that it's bounced above a rising 50-day line. You could argue that RSI bounce there from just below neutral 50 is also a leading indicator on the upside, which is obviously already has been. And at the top of the channel there, as high as 19,800, which we could see by the end of next month if we stay above that 50-day line area. I suppose there's a line of resistance there through 18,800 to be broken from last month. The Dow is the next contender, and here you can see that we just pushed onto the 50-day line there, 38,800. Want to see an end-of-day close above that to give us a retest of 40,000. A decent-looking hammer candle there yesterday, so that should give us a little bit of momentum for today, at least in theory anyway. And the overall trajectory here is that we're in a rising September trend channel. Top of the channel there, 41,600, and that would be the best case scenario target for the end of next month. If you're cautious, you wait for the RSI to get above neutral 50 versus 48 at the moment, and obviously also the 50-day line conquered on an end-of-day close basis. Next up is Bitcoin, and here there's celebrations in the air the longer the market remains above 70,000. We've got the recent multiple support points above a rising 50-day line and above the floor of that rising trend channel. And the floor of the channel there and the 50-day line near 65,000 above that. We're looking for the best levels ever, which were just shy of 73,800. And looking for that to happen during the course of the rest of June. RSI bounced off neutral 50 as well. So the technicals here looking quite decent. In fact, it's almost like a complex inverted head and shoulders that we've got there since the beginning of March, and the neckline being basically around the 73,000 level. Next on the list is gold, and here we've had a bit of sort of jiggery-pokery either side of the 50-day line. We were expecting the 50-day line to be touched and tested, and that's happened. Worst case was that we would head down to the floor of that rising trend channel from December, but so far we managed to avoid that near 22.80, but at least while there's no end-of-day close back below the 50-day line at 23.45, looking for 24.50 plus during the course of June, and then up to the top of that channel there, 25.60 by the end of next month. That's a December resistance line projection for gold. Moving along to the stocks, and a rather esoteric selection today again. We've got Ananda, which is bouncing off the triangle that it's been in since January. I saw some person on Twitter threatening or saying that they were buying the shares, which is interesting, very interesting perhaps. We want to see an end-of-day close back above the old support there, 0.25 from back in November. If we can do that, then we're looking for 0.4 pence, maybe as soon as the end of this month. Obviously, we don't want to see any fresh end-of-day closes back below the 0.22, 0.23 mid-close. Moving on to Asian energy, which I don't think I've ever covered before. Here we're on potential broadening triangle base. Obviously, it's probably not for widows and orphans, but here the neckline resistance at 18 pence above that on an end-of-day close basis. Looking for up to 30 pence by the end of next month. Sorry, by the end of this month, in fact. And the longer we stay above the 50-day line at 17 pence, the better for this situation anyway. Altitude is next, not a stock which is covered a lot by anyone, but here we're approaching our first target there, 48 pence. That's valid while we hold above the 200-day moving average at 46 pence. And next level up is the red resistance line projection from back in February last year, heading for 60 pence, which we're looking for by the end of next month or even sooner. Maybe you could get that by the end of this month. But the reason for inclusion today is that we had, with altitude, one of our best signals, the gap higher off the low, unfilled gap to the upside off the low, and a rising 50-day line to accompany that as well. Moving on to Bushveld, which has been difficult to say the least, but does look as though it's finally getting its act together. We're touching the 50-day line properly now for the first time since early March. End of day close above that, and basically recent neckline resistance around 0.8. And we're looking for up to 1.5 pence by the end of next month. Initial target there, filling the gap down that we had back in April around the 1.1 pence level. But the longer we stay above 0.8, the better this situation looks for finally closing that gap and recovery. Moving on to one of the big rises of the day, GRC, which has obliged in terms of making that target there. We had that target there at the top of that broadening triangle from August there at 10 pence, which until today looked rather optimistic. But if you look at the overall pattern here, we had a gap down at the beginning of last month and a gap up to the start this month. That's a bear trap island reversal, and that means that 10 pence, the initial target by the end of this month, is possible. Best case would be up to 12.5 pence in the top of that old August 2023 gap down that we had, and hopefully we could get that by the end of next month. It was quite a punchy call there. HEIQ is next, and here, well, the stock that most people don't look at, and you can see why from the chart. It's not exactly the most liquid situation around, but even so, we've had a bear trap island reversal, so gapping down there in January and then gapping up several times since, and gapping up and down several times since. But overall, a U-shaped turnaround, and the longer we stay above the 200-day moving average at 13.6 pence, the greater the chance of a move to the top of that triangle from last November at 19 pence, perhaps as soon as the end of this month. Jadestone is next, and here we bounced off a rising 200-day line. We also got the 50-day line rising, so that suggests we're a week or two away from a golden cross, or up to a golden cross. Traditionally the strongest part in the cycle, which means we're quite confident of looking for the top of that rising trend channel base from October up to 40 pence over the course of June. Early and end of day close back below 30 pence now, delaying that upside scenario. On to Minoan, which is one of our esoteric stocks. Here you can see we've broken recent resistance around 0.83, and above that looking for the top of the triangle there from basically this time last year as high as 1.15 pence. And that could happen as soon as the end of this month. So that stock finally appearing to get its act together after many years in the wilderness. One Media is next, and here, company I interviewed last month seems to be doing well off the back of that, perhaps. Here we had a gap close buy signal around 4.6 pence at the beginning of this month. We've now broken the 200-day line and heading for our first target there, 5.6 pence, so hopefully that's over the next few days. For the end of this month, best case scenario is that we head up to the upper parallel of that triangle from last summer as high as 7.6 pence by the end of next month. But the more time the shares spend above the 200-day line at 5p and old, that's also old support there from last year, the greater the chance of a move up to 7.5 pence plus. Tweeted out about Pantheon yesterday after it spurted higher. It's done rather well in the sense that we broke neckline resistance there around 32.5 pence, and above that looking for the top of that rising trend channel from back in August last year at 47 pence, hopefully by the end of this month, and really want to see this stock stay above its rising 50-day line. On to Petrofac, which I was trying to avoid, but couldn't resist it today. Here we've had the shares finding support, the old support on the way down, which was previously around 14.4 pence. Above that, looking for the shares to potentially fill the gap up to 22 pence, whatever happens in the meantime on the fundamental basis. If you're fussy, maybe you want to see this market break that 50-day line there, but the key here is you have 14.4 pence as a reasonably solid-looking support point. Another stock I didn't really want to look at is Regtech, and here the rise quite explosive. We've broken recent neckline resistance and old support around the 1 3/4 pence level. The longer we stay above that, the greater the chance. However, sort of slight that we could head up to 3.6 pence in the top of that broadening triangle. Obviously, there could be sellers lurking in this situation, which seems to be in the eyes of the bears quite a lot. On to strip, and here you can see that we not only hit our first target, or gap through it, which was around 59 pence, we've actually hit the second target I was looking for, which was up to 80 pence, and the view now is that the next level up really would be the top of that gap there from the summer of 2022 at 97 pence, hopefully sometime by the end of next month. Obviously, we've hit that second target there and had a bit of profit taking, but the longer we stay, or while we stay above 60 pence, the old target, up to the 97 pence area is possible. Finishing off with tertiary minerals, which, although it's rather slow, has been progressing. The sizzle here is, well, a couple of sizzles actually. First is the way that we had a gap close there back in the middle of April. And the second one is the way that we've got the 50 and 200 day moving average is rising, which suggests we're in the run up to a golden cross, which is usually the strongest part of the cycle. That means we're quite confident of the shares heading up to 0.17 pence as soon as the end of this month, while they remain above the 200-day moving average around 0.11. That's it from me today. More updates tomorrow.